Welcome to FreightWaves today. It is Monday, middle of August. It's almost college football time, Julie. I'm super pumped. How are you?
I'm good. It's a great weekend. Back at it today, ready for another week. First full week of school at our house, so it'll be a long one.
Are you celebrating? Is this good? Do you like summer? Do you miss summer?
I like parts of both. I like the routine of the school year. I really love a routine. But I, of course, had to get up a lot earlier this morning. Picture day, curl my tween's hair, all of those things. So getting everybody dressed in the morning is.
My wife, this is the week schools have gone back. We send our kids to a different school, and they don't start back till next week. So it's the dead week. The museums are closed. The pool is closed that we participate in. And so my wife is like, I don't know what to do with my children for the next couple of days because they're wild.
Yeah.
They're absolutely just completely insane, and they're running into the place. But we're here to talk freight, and we're here to talk industrials, and we're going to get into that with Ryan Farlow. He is RSM's Senior Analyst that breaks down the industrials. We're going to talk about autonomous trucks is getting a lot of attention. Waabi, which is a really interesting business, they are running simulations through a virtual reality world of running basically autonomous trucks through this sort of simulated world to train it. And you can do things in terms of in a simulated world that you wouldn't do in reality. So, freak snowstorms that you wouldn't normally run through, or all sorts of different experiences. Sort of like chaos mode, if you've ever played SimCity, boom. We're going to talk about really the industrial sector. We're going to talk about fleet electrification and the grid, which is a really important thing. We've got the VP of Commercial of OptiGrid. He's going to talk about the grid. Honestly, if you want electrification, you got to have improvements to the grid. We're going to get into all of that. So we have a jam-packed full day, as we do every day. Let's get into the headlines.
We kick things off with a major leadership change at an integrated asset-backed 4PL that's betting big on carrier verification technology. Mariner Logistics recently named Justin Turner Chief Executive Officer, handing the Texas operation to an executive who spent the past decade scaling brokerages and freight technology companies. Turner's career arc spans 7 years at Coyote Logistics, including a central leadership role through the company's $1.8 billion acquisition by UPS before moving to Global Trans, Stored, and ultimately Flock Freight, where he helped scale revenue from roughly $10 million to more than $500 million as Chief Revenue Officer. Mariner operates more than 300 owned tractors, more than 800 owned trailers, and 1 million square feet of warehouse space, serving manufacturing, aerospace, defense, and a growing book of data center freight. Turner said the company built its Sentinel protocol carrier verification standard as a cargo security requirement for high-value freight, and that multi-source verification system now applies to every shipment Mariner coordinates, continuously scoring carriers and lanes, rather than checking them once at sign-up. Meanwhile, in the managed logistics sector, consolidation is accelerating as a major 3PL adds another specialized broker to its platform. Tampa, Florida-based Blue Grace Logistics, announced it has acquired Idaho-based 3PL Truck TMS, a broker focused on less-than-truckload transportation that also provides shippers with truckload and supply chain services across North America, with a heavy concentration in the Pacific Northwest. Truck TMS had been operating as a Blue Grace partner and will now have full access to the company's technology platform and carrier network. Blue Grace serves more than 10,000 customers out of 9 offices across the U.S. and Mexico, and its Blue Ship platform has over 250,000 carriers. Financial terms of the transaction were not disclosed, but the deal marks Blue Grace's third acquisition in recent years after buying Michigan-based 3PLS TB Freight Group and Florida-based broker Freight Center last year. Finally, authorities in Pennsylvania have filed criminal charges in an alleged freight fraud scheme that highlights the vulnerabilities in distributor delivery verification. The CID of Washington Police Department filed 15 criminal charges against James Powell of Valley Grove, West Virginia, a distributor accused of creating fraudulent delivery invoices showing Little Debbie products reaching Pennsylvania retail stores when the deliveries never occurred. Authorities are seeking $17,167.97 $1,067 in restitution, and allege Powell used forged employee signatures to falsely verify receipt of merchandise, with those fraudulent invoices then entering the manufacturer's central billing system. The investigation identified Shop and Save, Giant Eagle, and Walmart locations within Washington County, Pennsylvania, and authorities allege Powell received commission payments for deliveries that never occurred. Powell now faces 3 second-degree felony counts of forgery, 2 third-degree felony counts each for theft by deception and unlawful taking, and another third-degree felony for deceptive or fraudulent business practices, and remains in custody while undergoing extradition from West Virginia to Washington County, Pennsylvania.
Julie, messing with Little Debbie.
Don't mess with our Little Debbies.
That hurts me personally, Little
the
Debbie.
Key Foods being here in Chattanooga. Don't mess with our Little Debbies.
No, don't mess with Little Debbie. Little Debbie fraud. By the way, what is your favorite Little Debbie snack cakes? I mean, there's the oatmeal cream pies, but
I like an oatmeal cream pie. I had those a lot when I was
Fudge
little.
Rounds are good.
I like the Star Crunch.
The Star Crunch. I don't love the Star Crunch. No, I think it's caramel. I'm not really into. They do these things around Mother's Day. It's like the yellow cake. Those are good. Those are legit.
Yeah, my neighbor is there. So
the zebra cakes are good too.
My son spends a lot of time at the neighbor's house. They play their son and my son, and so he's always like, "Christmas tree cakes are coming out, Mom."
But
I got a big one. Like
the nutty butter and those Christmas like things are good too. The nutty butter, I think those are like an all time. Because I love flavored peanut butter. I love the Reese's cups are my go-to. But anyways, I mean, look, this fraud, this is an interesting one because he was doctoring freight bills and ultimately ripping off McKee Baking or Little Debbie.
Yeah, it's not that it's a huge dollar amount, but it's that it's another way that fraud is creeping in, right? Yeah. Forging the signatures, alleging delivery on freight that was never delivered. Things that would be hard to flag and find in your system if it's just a little bit that they're skimming off.
Correct. I think it's just that marginal, almost like the rounding error where you start to trim off little dollars. And over time, it doesn't get caught short term, but over time, you eventually get caught. And you get more brazen. You see this, really a lot of fraud starts off small. And then people get more brazen with it because they think that they're in the clear and they're not. And this is just another example of the types of fraud that we covered. You may have caught this a couple of years ago, but do you remember the Macy's miscalculation, $330 million in freight? There apparently was, they were entering the freight bills incorrectly. It was an accounting, it wasn't fraud, but it was a miscalculation. And they were entering it incorrectly and then ended up being something like $300 million off. Oh. That was a big one. But this is an example where someone realized there's a lot of dollars going through their freight and logistics operations and you're skimming off the top. It's something we've talked about, when you were at US Press, I was at US Press. It always seemed to be that the breakdown department, the fuel department, and anybody in maintenance is where they were more likely to see fraud because those are big PO numbers, purchase orders, and you're essentially skimming off the top. So,
anywhere you're sending advances, yeah.
Yeah, what was that?
Anywhere you're sending advances.
Advances right? Or any kind of dollar amount, yeah. It just makes it absolutely fraudulent.
What about the Blue Grace story? What do you think about, so this is their third acquisition in just the last few years. Do you think this speaks to larger consolidation we'll continue seeing?
I think so. But Warburg has been in Blue Grace for a long time. And there's been conversations about them trying to sell Blue Grace. But I think they're having, if you sort of follow the Warburg, Warburg was in Coyote when it sold to UPS, also when they bought Access America, and they were at a point where they wanted to exit, and the way that they were able to really accelerate the exit with UPS was to go buy Access America out of Chattanooga, because really the Coyote business was high volume, a lot of van freight, of CPG, and Access America had this weird sort of overdimensional flatbed freight. It was the largest flatbed broker in the country. And that enabled, from a mix, for Coyote to tell a much bigger story, a much higher margin story, a much higher yield story. So it strikes me that if Warburg is looking to exit Blue Grace, that they probably need something that they can, provide a future buyer with some storyline that makes sense. That's what I read into it.
Yeah, makes sense.
So, look, the industrials are super hot. To talk about those, we have our first guest, Ryan Farlow. He is the industrial analyst at RSM. Ryan, welcome to FreightWaves Today.
Thanks, Craig. Thanks, Julie. Happy to be on with you guys today.
Well, you're coming to us from Birmingham, Alabama. There's not a more industrial city in America than in Birmingham, Alabama. Ryan, appreciate you coming in. Tell us about the state of the industrials right now.
Well, industrials are hot. I know you guys have talked a little bit about the ISM reading that came out recently. We're at 55.6, highest reading in years. We're at the 7th straight month of an increase in industrial activity. And so what's really encouraging when we think about industrials broadly is that, it's really been led by the data center build out. And in the recent ISM reading, we've really seen the demand broaden out. 15 out of the 18 sectors within ISM manufacturing increase. So now it's not just AI data centers, it's aerospace and defense. It's other semiconductors, there's other elements, chemicals and other elements that are increasing broad manufacturing demand outside of just kind of the narrower database build out. So it's very encouraging.
Ryan, do we think this is the catalyst? Was the catalyst really the AI data centers, the amount of capital and CapEx that went in to sort of bring the industrials out of the recession, the contraction that we saw over the last couple of years? Was that the trigger? And then you combine that with defense production, and frankly, higher energy prices are net positive for U.S. industrials. But what do you attribute the economy in terms of industrials coming back?
Well, I think it's nuanced, and there's a lot of different things. I certainly think the AI data center construction boom is certainly helping, but there's so many other things at play here. We have the impacts of OBA, the tax bill that created some great incentives to reshore and to build new facilities that get, bonus depreciation and other increases. You have kind of the tariff policy and landscape that has encouraged companies to bring manufacturing closer to home. And ultimately, you have a very strong consumer. We've seen consumer spending continue to increase. Private demand, which in the GDP number that just came out, real private demand was 3.9%, which tells us consumers are spending, and ultimately the manufacturing is going to follow that. So as long as consumers keep spending and they're healthy, we just feel like manufacturing will continue to follow and be strong. And we've seen that recently show up in the data.
So I want to talk also about the capacity side of the equation, not just the demand. I think that we love, hearing channel checks and confirmation of sort of this industrial revitalization that we've been talking about. But you all specialize kind of in that mid-market size. So what are you seeing from a capacity exit and with that sort of size of carrier?
Yeah, so there's over 500 transportation logistics companies that we serve here at RSM out of the US, and they're small, mid, large cap, but 80 to 90% of our clients are in the middle market, upper middle market. They're family owned, they're private equity owned, and we are, hearing consensus at this point. Obviously, the freight recession is over. That happened in November, December last year with the regulatory and compliance crackdown, and we're seeing meaningful exits of capacity leave the market. That started back in 23 and 2024 with rising bankruptcies. And then with the recent crackdown on the non-domiciled CDLs and the ELP mandate, capacity continues to leave the market. And really what we're hearing from our clients and talking with, executives is they can't find drivers. That's the biggest problem right now is the driver pool has just shrunk. When you also think about some of the other things that are going on in freight markets from just a litigation legal perspective, that's just going to continue to put a strain on companies trying to find drivers.
So I read in some of the articles and I guess they're white papers or articles that you've put out that freight expenditures are up 12% since 2019, but shipments are down 10%. So why is that gap important? What does it tell you?
Well, so if you look at since 2019, registered motor carriers have increased 30%. Volumes have been pretty flat. Shipments have been down. That's not a recipe for success, and we've seen that correct. When we look at the CAS index, and although volume is flat to up, the reason shipments are down, we believe, is there's some efficiency going on in the market. And so when you look at both truckload and LTL, there's companies that are able to find a way to move the same amount of freight with less loads. And so that distinction is important because we look at shipments from just a capacity perspective, how much shipments are needed to move the freight. And to the extent that we can continue creating efficiencies in the market, by transporting larger amounts of volume in the same or smaller amount of shipments is only going to help the supply and demand imbalance correct itself.
Man, Ryan, it's like you watch the show. You're talking about all the same stuff we've been talking about. It's great.
Yeah, I mean, look, I think Cass's shipment index, obviously more weighted to LTL, is showing exactly that. We've done a bunch of channel checks. We had Saia's CEO on Friday. We've had Web Estes. We've had multiple. The channel checks are really strong. There's been a little bit of cooling, but we believe intermodal mix is really the reason for some of the truckload demand cooling a bit in the month of July and August. Ryan, let's talk a little bit about sort of the broader state of industrials, because I think that's really where the storyline is. Consumer activity, really outside of a couple of sectors, housing specifically, has been pretty strong even throughout the last couple of years. But the industrial sector has been a dog. It has come back in November, started to come back in November, has continued to firm, as you've talked about, an expansion, a widening of the overall elements. Do we believe this is going to sustain itself into next year, or do we think there's some things that we should be worried about?
Well, there's a couple things that we are paying attention to in terms of risk, but I'll start with just saying there's no reason to believe this won't continue. In fact, our estimate here at RSM is GDP will continue to increase. It'll be about 2.5% in the second half, and we believe the setup for 2027 it will be even more favorable than 2026. I mean, the things that are potential disruptions when we think about manufacturing continuing this upward trend is going to be the consumer. Is the consumer going to continue to spend, especially in the face of elevated borrowing costs and elevated fuel and inflation? And so far, we haven't seen the consumer really pull back at all. A lot of the reasons we think we had a massive a tax refund that hit in the spring that gave the consumers a little bit of wallet share to continue bleeding that down. Savings are coming down for consumers, but they haven't shown a willingness to change their spending patterns in the face of inflation. So as long as they keep spending, we're looking at employment data. It's really a boring labor picture. It's kind of low hire, low fire. Real wages continue to be positive. We're expecting a record holiday season. I think it's 4% increase in projected holiday sales compared to last year. That would be another record. So as long as consumers continue to spend, there's no reason to think that manufacturing would move off of its current trajectory. The other thing we mentioned, that the data center AI build out. There is some risk that we're looking at. Is there, from just a construction standpoint, is there a risk that CapEx gets pushed out further? Is there a risk? There's a lot of public scrutiny at this point around data centers and some moratorium and pauses on that construction. Is that going to push out that? Because that really is also driving a lot of the industrial strength as well. And so that's something we're monitoring as well.
Yeah, I mean, there's 500 different municipality basically bans or some type of pausing of data center construction. This has become the hot story. Really, we shifted from net zero and decarbonization to no data centers. A lot of NIMBYism is driving it. Texas, shockingly enough, put out, I wouldn't call it a moratorium, but a certainly increased environmental review and impact studies required now for data center construction. It feels like there is certainly a shift now happening towards an anti-data center movement across the country, Ryan. I do worry that NIMBYism is just another example of where the United States tends to shoot itself when we have good things. We have momentum. What are your thoughts on that?
Yeah, Governor Abbott came out with what we call a review. It was a review, right, of going through audits of data centers. And some of that, may be symbolic. We have election considerations as well with that. But even in Birmingham, we put a 6-month moratorium on new data centers. And ultimately, our belief is these data centers will continue to be built out. I think there's a bit of a lack of transparency between the consumer and the data centers. If you look at the polling, a lot of the national polling, it's pretty clear that consumers appear to be largely against data centers in their community. But the one concern that's always brought up is electricity costs. The consumers don't want to pay for increased electricity due to data centers. And while we think there's a disconnect is because the hyperscalers met with Trump back in the spring and agreed to pay their own way on electricity and building out infrastructure. And so we think there's just maybe a little bit of a messaging disconnect. And so a lot of these, bans or pauses are really just an opportunity to come together and make sure that the consumers and the communities are not adversely impacted. We think those will get resolved. And ultimately, we think the data center build out is going to be a multi-year tailwind for industrials and for the freight market.
Ryan, it strikes me, you're in Birmingham, Hamilton County, Chattanooga, Tennessee's county. There's one in Northwest Georgia, put moratoriums on data centers as well. Largely due to concerns about a combination of water. By the way, we have plenty of water here. Like, there is no shortage of water. In fact, ask the state of Georgia, because they tried to steal it from the state of Tennessee a couple of years back. But the idea is really electricity, it's power prices. TVA is the largest federal utility. It powers Birmingham, Alabama, in addition to Chattanooga, Tennessee. And they want to build more nuclear. They've been very proactive on this. They're building nat gas plants. The reality is that we just have underinvested in our grid for so long that this is really the problem. It's not frankly, the data centers that's causing it. It was the underinvestment. My concern is this NIMBYism that takes hold. And as you point out, a lack of education. I mean, I think Sam Altman is the face of the AI world. It's not a positive thing for the AI data centers. Like, this guy is not a very good evangelist for AI data centers in itself. Seems that we need a little bit more rationality. It also strikes me that if we go back to, remember the Amazon HQ 2.0, where Amazon was sort of the charm child of the world, and all of a sudden there was this massive backlash, and they realized that they needed to change the way that they sort of handle the public. AI data centers are going through that right now.
Yeah, you're exactly right. And the hard thing about this situation is that you cannot improve the grid or transmission overnight. It's just going to take longer than some people expect. And so you're right, we've underinvested in the infrastructure with the grid. And so even the Texas, review was the precipitous of that was pausing new connection requests to the grid. I mean, that's why that ban happened. And so it's a grid problem, it's a transmission problem, and those don't fix itself overnight, just like the supply chain. We're talking to clients all the time about, diversifying their supply chains or nearshoring or bringing things into Mexico or Canada. And what we tell them, those things don't happen overnight. And so the grid is just another example. It's just going to take, 3-5 years at least to really get to a place where we're able to make some meaningful progress. And in the meantime, we just need to make sure that we're transparent with the impacts to the communities. And I think the data centers are willing to make that investment. It's just going to take some people getting to the table and talking through it and getting the right message out to the communities, because they ultimately do want to benefit the communities. In fact, I'm born in Madison, Mississippi, and Amazon just had a huge data center being built in Madison, in my own hometown, and talked to friends who still live there. And there's a ton of benefit to them. And I hear that they're redoing schools, they're getting new roads. A bunch of businesses are coming in to support the ecosystem. They're replenishing their local and state tax coffers. I mean, there's a lot of benefits there. I think it's just getting everybody to the table to make sure it's benefiting people on all sides.
And then look, these are better for the community than these old smokestack industries. Not to say that we don't need industry, but in many ways they're better for the environment. The amount of money that goes into communities, whether we're talking schools or roads, as you mentioned, infrastructure, it's good. And look, ultimately, I think there's been a couple of things. Texas, the Permian Basin, a lot of the hyperscalers are just going directly to those nat gas fields and building their generators right there just to basically create a closed loop, which strikes me as a real opportunity, because they're flaring nat gas right now. So why not put it to use into something we all benefit from? That's the first thing. Second, I don't know if you caught this, but Vikram Ramaswamy up in Ohio, one of his proposals is, look, if you're going to build a data center, then you need to get free electricity away. If you put it in my community, I think that's a real smart move, because it does align the incentive base. Look, I'd love to have free power. If TVA wants to give free power away and put it as data centers, I'm all for it.
I agree. I did see Vivek's post on X, and his recommendation was, okay, if you put a data center in our community, then you you pay for the community's power. I think that seems reasonable. And I don't know that I'd be curious what the hyperscalers come back and say.
Do you think it has legs?
I think that the data centers are going to be willing to ensure that consumers' electricity bills are not increasing. I think for sure. I mean, they've already publicly communicated that. Now, inside of that, there's some messaging about, is it paying for consumers' electricity bills in lieu of state and tax incentives? Right now, a lot of the hyperscalers are getting significant tax incentives. So maybe it's just redesigning, maybe it's shuffling. But I do think the hyperscalers would agree to at least not have a negative impact on consumers' electricity bills should they decide to build in those communities.
All right, Ryan, one more question. As we talked about, we like to do channel checks, and you guys work with more than 500 transportation logistics companies. So what are you hearing directly from those operators regarding capacity exits around regulation, how much you think will actually exit, and anything else relevant to the freight market for the rest of the year?
Well, we're hearing from a lot of our clients they're making money in the freight market now, which is awesome. We love to hear that. They're doing well. I talked to a couple of CEOs just last week about July results. They're doing great. They're getting contract increases. The spot prices, as you guys have talked about, have gone up pretty substantially, and contract rates will follow, which is awesome especially for the asset heavy carriers. I mean, every increase to a rate, hits the bottom line. And so they're excited about the future. They're excited about what rates are. There is concern from a cost standpoint. The ATRI, American Transportation Research Institute, came out with their cost in trucking report just last month. Cost in trucking are as high as they've ever been. There's certainly concerns from an insurance perspective. Companies, especially middle market companies, are running their trucks longer. They'll need to figure out how to replenish those trucks. We have a pre-buy that's occurring a little bit right now. I mean, there's just a lot of things going on, but ultimately, a lot of our clients are bullish on the freight market, excited for the future. The biggest concern right now is probably just from a cost perspective. Some of the issues that are ongoing with the Montgomery case, as well as the C.H. Robinson case. We're having a lot of conversations with brokers about how to kind of make some changes in their business to accommodate the growing exposure there. But, ultimately, I'll conclude by saying all of these are gravitational forces towards a more consolidated industry structure. It's going to be hard right now with the interest rates and borrowing costs as high as they are. But in talking with PE funds that are invested in infrastructure and transportation, they see a great appetite in 2027 for increased deal activity. So we're excited to see that take place.
Ryan, you'll have to come visit us in Chattanooga. It's a 2-hour drive. You're sort of a sister city down there in Birmingham, Alabama. No part of the.
Would love to.
We'd love to see you. Big fan of Birmingham. Big fan of the New South.
Yeah.
So did you know that if you took Nashville to Atlanta and added Birmingham, Huntsville, and Knoxville and Chattanooga, that is 11 million people. It's the 20th largest economy in the world.
Yeah.
Pretty insane.
It is.
And it's where the world's coming because you've got power, you got batteries, you have solar, you have automotive.
Quality of life.
Industrial pulse. Yeah. Great quality of life. We'll be right back. Stay with us.
The drivers, dispatchers, mechanics, and crews who keep the world moving deserve tools that work as hard as they do. That's what Samsara builds, technology for safer, more efficient operations, made with the people who do the work. Samsara, built with operators for operators. Learn more at samsara.com.
The world doesn't wait, so neither do they. Wheels on the interstate, boots on the site, hands on the shipment. We build for the world out here, and we build it with the people who live it. Ideas from the field, made real by world-class R&D to keep the operation sharp, the front lines safe, and the world moving. From one cab to a global network. Billions of miles, trillions of data points, every one making your operation better. And we never build it alone. Samsara, built with operators.
Once a year, the entire freight industry stops what it's doing and comes to one place, Chattanooga, Tennessee. This is F3, the Future of Freight Festival. It isn't just a conference. It's the largest festival in freight, built to pull you all the way in. The energy, the ideas, the atmosphere, and the people who move this industry forward. Over 50 speakers, 4 events across 3 days, founders, executives, innovators, and disruptors, all under one roof, all asking the same question: what comes next? On the main stage, the sharpest minds in freight take on the biggest questions in the business, the trends, the technology, and the forces shaping what's ahead. Then the clock starts, 7 minutes, no exceptions. The cutting edge of freight tech goes head to head, live, battling for best in show. When the time's up, the lights go out. And in between, the conversations that don't happen anywhere else. The connections that change the trajectory of your business. The relationships you'll carry long after you leave. Because when the sessions end, the festival begins. Live entertainment, unforgettable experiences, a celebration of the world of freight, and an energy you won't find at any other event in the industry. The leaders you need, the access you won't get anywhere else. This is where knowledge is shared, where deals get done, where the future of freight gets decided. F3, Future of Freight Festival, October 27th and 28th. The Signal, Chattanooga, Tennessee. We'll see you there. Register now at live.freightwaves.com.
Welcome back. Earlier today, Craig took a deep dive into the sonar data. So let's get right to that sonar update.
Trucking market looks to be slowing, or is it? That's really a question on the minds of pretty much everybody across the brokerage industry. They're seeing spot postings drop over the last couple of weeks. And the question is, what's really going on? I'm going to break it down using Sonar's data to explain exactly what is happening in the freight market. Rest assured, the economy is doing quite well right now. Our channel checks confirm that companies are seeing firming in volumes in the large asset-based side of the business. This includes both LTL providers as well as large truckload providers. So why are things slowing? In fact, when you look at the accepted truckload volumes, which is a part of our indexes inside of Sonar, we're down 3.3% year over year. That would suggest things are soft or softening. It's not the case. The reason that things feel softer and volumes have dropped in the truckload market is entirely to do with the railroads or intermodal. Intermodal is picking up its share. Domestic truckload volumes across the intermodal, these are domestic containers, are up 10% year over year. While long haul truckload volumes that go by truck are basically flat. There's been no increase in long haul. So the railroads are picking up a predominant amount of the share. They are picking off truckload volumes that would normally go by truck are actually going by rail right now. This is exactly what's happening. We've been talking about it all year, how strong the railroads are. Every Wednesday, we put out the AAR, which is the American Association of Railroads, their weekly tonnage index. We're up 4.4%. Now, when you think about the fact that railroads, the intermodal domestic volumes, really are slower than what, in terms of the speed of traffic, than what is going by truckload, it suggests that really companies are not feeling a lot of pressure on their supply chains. And we can know this because we can look at the total amount of inventory that they took in. Earlier this year, companies were tight on inventories. Over the last couple of months, and ports have been flowing in. The ports have seen really strong volumes in the last couple of months as retailers start to rebuild inventories for the second half. So a lot of concern and caution about the overall state of the consumer as we ended 2025. Companies were really worried about consumers dropping off, particularly with inflationary concerns and tariff concerns. And that didn't happen. Things have actually been pretty strong. Consumers have held in and have been quite robust. And you can see this in earnings across all major categories except for food. Some of the food categories within CPG or retail, restaurant retail have been soft, but that's probably related to GLP-1s and consumer habits, changing what they consume, more than it is anything to do with the economy. So when we look at the overall state of the economy, it looks pretty strong. Industrials are ramping, but trucking volumes, and particularly in the truckload sector, have dropped. And again, it's intermodal. Intermodal is an interchangeable, fungible commodity between truckload, which goes by truck, and rail freight, containers on rail, that goes by the railroads. And the railroads are picking up share. We're talking to all of the major intermodal providers. We've been talking to them on FreightWaves today. And what they're telling us is that things are incredibly robust. In fact, you can look at J.B. Hunt's earnings to see just how strong intermodal is, particularly domestic intermodal, which is the lifeblood of J.B. Hunt's intermodal business. It was very robust. And so what we're seeing right now is really a very strong intermodal sector that's taking share off of truck. And because companies are building inventories and there's no time pressure, in other words, got months before those products need to be consumed, these are essentially warehouse on rails or warehouse on wheels. They're moving warehouses. So what's happening right now is large retailers are importing a lot of product from overseas, taking advantage of time, taking advantage of an advanced amount of months before the products are needed, and therefore they're not driving a lot of those volumes into trucking. If you need the products right now, you move it by truck. If you don't need it for a few months, you can move it by rail. And you're taking advantage of the 34% discount of rail versus truck. We have the Intermodal Savings Index tracking the contract trucking rates to intermodal rates. It's exactly what the data says, is that 34% discount is exactly what companies are doing right now with their freight. They're moving it by the railroads and not by truck. This is really driven by two factors. One is time, more inventory, and the fact that when fuel prices increase substantially, the intermodal fuel surcharge moves up a lot less than the trucking fuel surcharge does. And it takes a couple of months. Companies cannot immediately reconfigure the supply chains to move the mode of traffic from truck to intermodal if they've not done it before. So it takes some time to ship those volumes from truck to intermodal. And that's why it's been a lag. That's why it's taken some time. That's why when we first started seeing fuel prices increase in March, it really wasn't until June before we started to see a real firming in intermodal traffic. And that has continued to hold. So what we're seeing is just a share gain, a modal shift. And this will probably play out at least until September and October, when time does matter. Companies start to worry about getting freight into their supply chains for the fourth quarter and for the holiday rush. And therefore, intermodal traffic will be strong, but the modal gains will not continue through the rest of the year. And we'll start to see truck firm up in October and in November. But one point of caution, because products have been moving and because they've been moving through slower modes of traffic, it means that we may not see as robust of a fourth quarter as perhaps we would have expected, simply because the freight is moving by slower trains and there's more time built into it. In other words, the freight's crawling across the United States. It's moving closer to inland and center of the country distribution centers, and therefore there's not as much time pressure to move it out as what you would have expected if things were less planned or there was a big surge of products at the end. Something to keep an eye on. But again, I think it's the railroads. That's your answer. That's why trucking accepted volumes are down versus where they were last year.
All right, Craig. So not with tender rejections as well as volumes remaining flat to a little bit muted, the thesis is doesn't mean that there's capacity entering or more capacity or less freight. It means that there's been mode conversion from van to intermodal.
It's intermodal. There's less intensity in terms of time. We see it in the inventory numbers. LMI started to see some inventory build as companies were preparing. That's why the ports have been pretty strong relative to what maybe you would have expected it. And really, it's about all those things.
Makes
So
perfect
nothing
sense.
like there's no sign that the economy's slowing in any of the economic data.
Right.
ISM, we talked about that earlier with RSM's economist. Is ISM is strong? You've got the LMI data is telling us the same thing. We talk to CEOs on a given week. We have 10 different CEOs from the logistics sector on FreightWaves today, and everyone is talking about from a channel check things are good.
Yeah, and everything that Ryan echoed all of those same things as well, our last
Absolutely.
guest.
So again, I think it's all just modal conversion. Look, I think if you're going to be bullish on something, be bullish on JB Hunt because they have that domestic intermodal. You could also argue that Hub Group is in the same box. So, and the railroads.
Yeah.
Love the railroads.
Yes.
Wednesday is our AAR day. So we'll cover the railroads again.
Well, Monday is our fraud day. So let's get into our Fraud Watch segment. So as mentioned in the headlines, a West Virginia man faces 15 criminal charges in a Little Debbie snack fraud scheme. Police say James Powell forged invoices and signature to fake deliveries to stores in Washington County, Pennsylvania. He collected commissions on freight that never moved. Distributor Stewart Snacks reimbursed retailers and the manufacturer. Powell is undergoing extradition from West Virginia. All charges remain allegations. New Verisk CargoNet data shows cargo theft losses more than doubled in Q2. The intelligence network documented 677 incidents across the United States and Canada. Reports fell 26% year over year to 677 incidents, but losses jumped to $304.6 million. Copper remains the most targeted commodity for the second year running. Our Fraud Watch segment, Verified, is brought to you by Highway.
I think those numbers are understated. We talked about this
Yes.
before. Like Verisk is pulling official claims data, but in terms of really, what was the number? 6 out of 1 for every incident that's reported. There's been like 6 that have happened.
That's sort of what we heard at the fraud
It was some
summit.
crazy stat that it's only a minority of incidents. So it's much bigger than I think the number that Verisk reported.
Right, if they can handle it themselves, they're not going to create the press release around the data,
exactly.
and two,
you got to report it.
the noise.
So.
Yeah.
We'll be right back after the break. We're going to talk about AI. It's hot in supply chains. Stay with us.
The world doesn't wait, so neither do they. Wheels on the interstate, boots on the site, hands on the shipment. We build for the world out here, and we build it with the people who live it. Ideas from the field, made real by world-class R&D to keep the operation sharp, the front lines safe, and the world moving. From one cab to a global network, billions of miles, trillions of data points, every one making your operation better. And we never build it alone. Samsara, built with operators.
Every load you move depends on one thing, knowing who's on the other side. And Highway gives freight brokers the carrier identity tools to verify carriers, secure the load, and book with confidence. The performance guarantee puts up $100,000 behind that promise. Real money behind the standard. No other freight technology company has made that commitment. This is, again, Highway, the standard for carrier identity.
Once a year, the entire freight industry stops what it's doing and comes to one place, Chattanooga, Tennessee. This is F3, the Future of Freight Festival. It isn't just a conference. It's the largest festival in freight, built to pull you all the way in. The energy, the ideas, the atmosphere, and the people who move this industry forward. Over 50 speakers, 4 events across 3 days, founders, executives, innovators, and disruptors, all under one roof, all asking the same question: what comes next? On the main stage, the sharpest minds in freight take on the biggest questions in the business: the trends, the technology, and the forces shaping what's ahead. Then the clock starts. 7 minutes, no exceptions. The cutting edge of freight tech goes head-to-head, live, battling for best in show. When the time's up, the lights go out. And in between, the conversations that don't happen anywhere else. The connections that change the trajectory of your business. The relationships you'll carry long after you leave. Because when the sessions end, the festival begins. Live entertainment, unforgettable experiences, a celebration of the world of freight, and an energy you won't find at any other event in the industry. The leaders you need, the access you won't get anywhere else. This is where knowledge is shared, where deals get done, where the future of freight gets decided. F3, Future of Freight Festival, October 27th and 28th. The Signal, Chattanooga, Tennessee. We'll see you there. Register now at live.freightwaves.com.
Well, welcome back to FreightWaves today. We're going to talk AI and supply chain. Supply chains are being disrupted, but also are primed for disruption through AI. Adrian Smith is the co-founder of Ripple, a company that is implementing AI agentic solutions across the entire supply chain. Welcome, Adrian. Welcome to FreightWaves today.
Pleasure to be here, Craig and Julie. Thank you so much for having me as a guest.
We're excited to have you. AI is obviously a big topic. There's both the demand, as we talked on earlier on the show, that it's driving, because these AI data centers are a big piece of it, but also supply chains and logistics and forwarders are implementing AI to improve their operations. You guys are at the forefront of that. You got a big announcement with JAS. Tell us about what the news is.
So thank you for teeing us up. We are absolutely thrilled to be able to be partnering with JAS worldwide and focusing specifically on a space of QHSE, audit management, incident management, vendor management, and ESG reporting with EIMS. Now, this is essentially supporting a visionary strategy that JAS are implementing, where that function within the organization does not necessarily have to be an administrative or compliance cost, but rather with the right governance from JAS and the right structures and technology that we're partnering with them to deliver, it becomes a revenue protection mechanism and a growth engine. You know, they're attracting new customers, new high-value customers, and retaining those governance and compliance focused customers that they have. So it's a real visionary leadership from JAS that we're supporting on that journey.
Adrian, can you tell us kind of exactly what workflows Ripple is actually taking over?
Yeah, so we're looking at helping them with their audit management, so internally understanding how they can structure their internal audits and external audits through an automated platform that takes out the manual effort associated with that, tracking in spreadsheets, manually auditing documents, issuing policies, etc., and adhering and managing the compliance within staff, etc., within the organization. We're also looking at their supply chain management and onboarding, so their whole vendor network across over 100 countries, 500 locations for JAS worldwide, and all of the suppliers that are providing valuable service to JAS, making sure that that relationship is de-risked by understanding things like the dangerous goods, certification, insurance documentation, et cetera, and we go on to incident management within the organization that JAS has globally. So understanding when an incident happens, how that's properly triaged, investigated, and then lessons learned from that, which obviously then enhance the quality of the organization, because near misses, for example, are indicators of accidents. If you avoid accidents, then the culture of the organization improves, and that's a great metric that JAS have asked us to keep a track on. But this over 100 countries, managing that through manual processes and expert people takes up a lot of their time. So what we're partnering with JAS on, and they've been, again, I say visionary in leading this charge, is freeing up that talented resource to focus on real customer value for JAS's customers, which really enhances their reputation in the market, and we're happy to support them on that.
Adrian, quality, health, safety, and the environment, QHSE, is a term that American audiences may not be familiar with, but it's been something that, particularly in the UK, has been moving even before ESG. these are controversial, shouldn't be, but they're controversial terms in the United States that become sort of polarizing and lightning rods for attention. Tell us a little bit about why this is important for particularly European and global organizations, more so than maybe it gets the appreciation in the United States.
Sure, and you're right, Craig, to break that down, right? So there are many different aspects to QHSE, but fundamentally it's about quality, and it's quality from the context of avoiding, as I mentioned, those incidents within an organization. So is your operation being run in a qualitative manner? Are you providing the right service to your customers globally, necessarily in the EU or the UK? And then also from an audit perspective, making sure that you have the right policies in place to then support and be a foundation for that quality. The environment or the ESG aspect of that is also making sure that you're open and honest about what you're doing, and from an environmental perspective, a social and governance aspect. But having the data there, often large organizations struggle with having to aggregate that data, manage it, and understand what it's telling them. Now, if you're doing that globally across the scale that Jazz have across 100 countries, 500 locations, it becomes very challenging. And I mean, I'm a big advocate of Lean Six Sigma. And as soon as variation creeps into any business process, whether it's your quote to cash, whether it's your customs compliance, or whether it's QHSE or the ESG aspect, there is rework inserted. I think the lean technical term is judoka, right? You have to stop it as soon as you find an issue, improve it, and then move on from that. And I think that's what we're trying to support Jazz across all of those different processes, including the ESG aspect. And it's all about data management and informing decisions based on that data.
There's been a lot of conversation about the environmental impact of AI data centers. You guys are implementing AI or helping companies implement AI. Feels like a little bit of I wouldn't say a contradiction, but how do you balance this conversation from a UK perspective of, what the impact of AI data centers are on the overall environmental footprint, but still are delivering solutions to help companies achieve compliance?
Sure, I mean, it's a great question. And I think, there have been various conversations around the consumption of energy and the use of data centers, and particularly certain types of chip consuming energy. But what we do at Ripple, we have three main focus points for our AI platform. It is agentic AI, but we build it on top of a modular enterprise-grade technical architecture that we've been building for over 20 years. And what that enables us to do is to control the AI. We put strict controls in the process as it develops, and that means we control, as everybody will know these days, hallucination, which is essentially variation in AI, but also the use of AI itself. We're agnostic to the model that we use. And as soon as AI starts to become token hungry and starts consuming lots and lots of what would be, in your questions context, data center usage, we restrict that and optimize the use of AI so that the energy consumption and also the token cost is minimized for our customers. So we're very focused on controlling AI use to only when it's needed. Now, any organization out there that has enabled their technology team to start vibe coding will have felt the pain of exponential growth in token usage. And that correlates directly to that energy consumption in the data centers that you mentioned, Craig. But one of our key fundamental focuses is on controlling that AI, both from a token cost, but also an energy as a byproduct of that.
Yeah, so it's just, there's been so much of there's been these great stories. I don't know if they're great for the companies having to pay them, but essentially these sort of ghost processes in the machine, if you will, that are sort of left there on auto, but they're not generating any sort of outcome, but companies by default are burning through tokens. Is really the goal here, as part of the way you guys are viewing compliance with QHSE, is really about just making sure that the processes that are driving are actually achieving outcomes? Is that the primary goal?
Yeah, I think it's twofold. It's ensuring that we're enabling Jazz to scale their organization in order to meet those customer demands and making sure that their customers have the right surety and data to help in those business processes. But also it is ensuring that we have the right technology in place that then enables scaling of that, because it's a critical key aspect for Jazz's focus.
So what about, one of the things I'm curious to get your take on is, building an AI startup in Europe, and we'll call it Sorry, I know that you're not in Europe, you're in the UK, and I know that that could be a lightning rod for our fellow British fans. But the environment, particularly the funding environment, is quite different. What is it like for you as founder of this business in terms of these businesses are capital intensive? Are you coming to the United States to raise venture capital? What does that look like for you guys?
Well, I mean, we are currently absolutely focused on our customers because one of our key tenets in the organization is understand exactly what the customer needs and deliver that with a white glove service treatment. We are in the States. We're working across a huge number of locations across the States already. And our focus at the moment is delivering that value. We've bootstrapped to date and we haven't taken on any funding. And at the moment, what we're doing, especially with our partnership with Jazz, is focusing on driving that value for the customer to their specific requirements. Because a lot of our conversations with our customers have focused on off-the-shelf platforms, not giving them exactly what they need. So our key focus is actually delivering their specific requirements, because everybody's nuanced in how they deliver these systems, and then giving that value to our customers so that our product is absolutely right for them. And that's kind of our mantra going forwards. If at some point in the future we then need to look at investment, as I said, we're already working across the States. It's our key market at the moment, and we'll make that decision as it comes along.
Well, I think the great thing is you can fund it through cash flows of revenue. That's always the least dilutive, and frankly, keeps you in charge as founder. Someone who's raised venture capital, I can tell you, I'm a little jealous of founders that are able to self-fund, because it's your business and you're in control, and I think that's pretty remarkable and admirable.
It enables you to focus exactly on your customer rather than being distracted by a paymaster as well, I find.
Yeah, for sure. I mean, it's quite different. I think in the US, it may be a little bit easier to raise venture capital than in the UK. I think it's also, maybe it's more acceptable in the US from just a perception standpoint. And customers here, there's no judgment. Whereas my understanding, talking to European and British and really businesses that are not based in the States, there's almost a narrative to it, raising outside investors versus it being your business. It just creates a little bit more optics for customers, whereas here it's totally socially acceptable, maybe even expected that companies do it.
As soon as I need it, don't you worry, I'll be out there knocking the door. Probably in the
We'll
States,
welcome you with open arms here in the United States. Our venture capital markets are open. VCs love funding AI companies. So Adrian, consider America open for business and open for investment. And we promise we're not going to judge you for taking venture capital. We will support you.
Well, don't worry, I won't be worried at all about judgment. As long as it gives me that liquidity and I'm off, that'd be great.
It's great for investment.
So Adrian, I want to talk a little bit more about the product. And you have said that Ripple can cut manual effort by 95%. How do you actually measure that kind of improvement and show those results to your customers?
Sure, great question. I mean, the results typically come from our customers. So that exact metric came from a Dreyage client of ours down in Houston who operate across 10 terminals, who we helped with a quote to cash process. And they came back to us and said, what used to take us 95% of our time now is taken up by 5%. And they're off and driving further revenue with that spare time. And it's released those really bright, sharp individuals who know the business inside and out to then go and focus on driving that top line of their balance sheet, which is a great accolade for them. And equally, we've got a freight forwarder, Pentagon Freight Services, who we're running a customs extraction and submission process for. They were able to release 20 of their staff to focus on driving revenue. And these are expert freight forwarder people who've got decades of experience, previously doing a lot of manual admin on customs extraction, classification, and submission, are now able to focus on that customer value, which is a real key catalyst for growth in these organizations.
So speaking of that value, you've said the goal is speed to value, not necessarily a multi-year build. So when you sign a new deal with someone like Jazz or a new customer, how quickly do they actually start seeing results, and what does that process look like?
So, I mean, we, as I mentioned, have built this platform over 20 plus years. I've been deploying enterprise-grade software, and my technical team have been doing the same for over 20 years. And what we're able to do is leverage agentic AI now to create a speed, not only just an off-the-shelf product, but a customized product for our clients within weeks. So we're going through that exercise now with Jazz, and iterative waves of requirements are coming in, and we have a 2-week development and UAT cycle where we're able to deploy this to exactly their requirements in that kind of time frame. And they're thrilled and are hugely supportive in giving us the right level of detail that we need so that we can then accelerate those build cycles accordingly.
Adrian, I got to ask, we cover a lot on FreightWaves today, but the AI question is this a bubble? I think everyone's sort of wondering, make your case on why AI is not a bubble. Unless you believe it's a bubble, we'll accept that as an answer, but I suspect you don't believe it's a bubble, but love to get your take on it.
I think I've heard the stories about AI being a bubble, but I think anybody who has deployed AI, particularly into operations, and have seen the operational benefit and the time that it is released, and then the peripheral benefits around revenue generation from staff being released from some of these burdensome activities to actually focusing on some of the value add aspects that they've always been skilled to do, but were possibly not able to focus on. And then the beneficial downstream impact is they actually are starting to enjoy what they're doing more because it's that sort of more face-to-face client engaging aspect. I think those things to me say that the benefits of AI aren't going to go away, whether you call it a bubble, whether there's some hype in some of the models that have been developed rather than the specific use cases. I don't know, but the use cases we see, the benefits are undeniable, and I don't think they're going to go away.
So Adrian, the last question we have for you is, okay, so corporations are trying to implement AI. I think management teams would like to move a lot faster than even the comfort of their own people. What do you see in terms of how can management really bridge the gap to where the teams will embrace the technology versus sort of feel like it's the fear that it's going to replace them?
I think there's any change management exercise, you need to communicate with your staff, right? You need to understand what motivates them. You need to make sure that you communicate why you're doing this. And often if you sit down with staff and tell them, this is actually to empower you rather than take away a job. We don't see that at Ripple. We see that this is actually going to help, certainly the logistics companies that we're working with, drive top line. And I worked at General Electric way back in my past, great company, great US company. And I think it was Jack Welch, has an adage where he was talking to one of his work assembly line staff, and they were talking about adopting Lean Six Sigma, or I think it may have been workout at the time, an improvement technique. And he said, for 20 years, I've been using my hands. My brain came for free. It's the first time I've been asked. But actually, if you engage with your staff, those guys are the ones where they know where the actual pain points are. And you tap into that knowledge, then you can release the pain, which motivates them. And it just becomes exponential benefit for your business.
Well, Adrian, really appreciate your time here. We're going to keep an eye on this AI conversation and have you back. Best of luck as you implement JAS as well as just overall helping solve automation. Appreciate it. Stay with us. We're going to continue on the automation conversation. This time we're going to get into autonomous trucks. Always a favorite topic for people. It's polarizing. We're going to hear from Waabi's founder and CEO, Raquel Urtasun, about what they do to actually implement autonomous vehicles across the commercial landscape. Stay with us.
The world doesn't wait, so neither do they. Wheels on the interstate, boots on the site, hands on the shipment. We build for the world out here, and we build it with the people who live it. Ideas from the field, made real by world-class R&D to keep the operation sharp, the front lines safe, and the world moving. From one cab to a global network, billions of miles, trillions of data points, Every one making your operation better. And we never build it alone. Samsara, built with operators.
Once a year, the entire freight industry stops what it's doing and comes to one place, Chattanooga, Tennessee. This is F3, the Future of Freight Festival. It isn't just a conference. It's the largest festival in freight, built to pull you all the way in. The energy, the ideas, the atmosphere, and the people who move this industry forward. Over 50 speakers, 4 events across 3 days, founders, executives, innovators, and disruptors, all under one roof, all asking the same question: what comes next? On the main stage, the sharpest minds in freight take on the biggest questions in the business, the trends, the technology, and the forces shaping what's ahead. Then the clock starts. 7 minutes, no exceptions. The cutting edge of freight tech goes head to head, live, battling for best in show. When the time's up, the lights go out. And in between, the conversations that don't happen anywhere else. The connections that change the trajectory of your business. The relationships you'll carry long after you leave. Because when the sessions end, the festival begins. Live entertainment, unforgettable experiences, a celebration of the world of freight, and an energy you won't find at any other event in the industry. The leaders you need, the access you won't get anywhere else. This is where knowledge is shared, where deals get done, where the future of freight gets decided. F3, Future of Freight Festival, October 27th and 28th. The Signal, Chattanooga, Tennessee. We'll see you there. Register now at live.freightwaves.com.
Welcome back to FreightWaves Today. If there is an AI autonomous company out there that I think is breaking the mold, it is Waabi. And to talk about what exactly Waabi is doing, which is very different than really anyone else, is the founder and CEO, Raquel Urtasun. Raquel, welcome to FreightWaves Today. We're excited to have you.
Thank you, and really a pleasure to be here, Craig.
Well, let's talk a little bit about Waabi. It's such an interesting story. I wrote a book last year where I talked about Waabi, is the idea of the simulations that you guys are running. Tell our audience a little bit about what makes Waabi special.
Yeah, so what Waves makes really Waabi special is on the technology side, and we are bringing really a full AI-first approach. And the idea is that you unleash the full power of AI while still maintaining and enhancing the safety of the systems, right? So this is, can you build an end-to-end system that is fully verifiable, that has really for the first time the ability to truly scale and meet customer demands, together with a simulator that is the same as the real world, so that you can really expose the system to any situation that might happen on the road, and you don't need to discover, issues on the road. Instead, before you touch the road, the system is so performant that it's superhuman.
So Raquel, one of my favorite parts of the Waabi story is what you can do in a simulation. I'm a pilot, and I like to fly the simulators because it gives me the chance to sort of, and look, this is the reason that the aviation market is so safe, the commercial aviation is so safe, is because pilots are constantly training these simulators. But one of the nice things about simulation is that you can do things you would never do in real life to really enhance your skill sets. And as I understand Waabi, really the thing that the aha moment for me was that you're doing this for the AI itself, is that it hasn't have situational awareness, that it's effectively in a simulation. It thinks it's actually on the roads learning these things. But what's great about that is you can create all sorts of situations that you would never create in real life that really can make the AI and the autonomous vehicle that much safer because it thinks it's in these different instances. Give us a couple examples of that.
Yeah, and it's very interesting that you actually have two AI systems, playing against each other, right? You have one AI system is the simulator, where basically it's creating, the world around where the self-driving vehicle drives, and for the first time in the industry, it does it in a way that the self-driving system doesn't know that it's not reality, right? And we can actually prove mathematically that that's the case. So that's a massive, enabler, as you can imagine, of both training the system as well as being able to prove that the system is safe in the first place, particularly on those safety critical situations that there is no way that you can actually do this in the real world because consequences will be catastrophic, right? And so there is a lot of technology new technology that went into building such a simulator. But think about from the child that comes jumps on the road to emergency vehicles that go on the opposite side of the road to a fire, an accident, with parts around the all over the road, etc. All these things can be simulated in Waabi World, and since it's generative AI technology, it can create unbounded number of situations itself. You don't need a human to be prompting the actual simulator, so it gives you all the coverage of anything that you will be able to see in the real world while being grounded in reality and in physics, which is really amazing what this technology can do, and it enables the the self-driving system to be super performant from day one, right? Which is also very important as you think about development. You want to minimize the risk not only in deployment that driverless, but also as you get there.
So I want to talk more about the performance of that Waabi Driver, AI driver. And recently in the news, you guys released an article, information about the Waabi Driver previously trained on a Peterbilt, seamlessly going into a Volvo, even with different sensors. So I want to talk about generalization. Can you explain what that means in AI and then how it's relevant here?
Yeah, and I think for the audience, will be worth to touch upon. There is several types of generalization that humans do seamlessly, but traditionally is difficult for machines. In the industry, we talk a lot about generalization across environments and scenarios, and this is, for example, if you go to a new geography, this is important for our customers because it's the ability to open new lanes really quickly, right? That generalization is very important. Also across operational design domains. For example, you want the self-driving vehicle, the truck, to not only drive on highways, but also on surface streets, to be able, Waabi pioneer, a door-to-door business model, where since Q1 of 2025, we don't need terminals, we can directly go to the end customer, and that's massive advantage, and something that the customers really, get behind, because finally we have a solution which is, tackling the needs of what, how freight is done today, and this is what they actually want as, the self-driving product. But the one type of generalization that is not really talked in the industry is because nobody has this ability, before this big announcement, is a generalization across what we call embodiments. Is this idea that the virtual driver can actually transfer to new vehicle platforms. And this is a new type of vehicle that has different sensors, different ways of controlling that vehicle, and also different characteristics, different shapes, right? And the reason why this matters for customers is that on one side, we want to provide a solution that is not just for Class 8 trucks. If you think about box trucks, Class 6, 7, if you think about robotaxis, where Waabi is also expanding, which is very exciting, new vertical. But also when you think about building a global product, in Europe, trucks are very different, right? In Asia as well. So we have the ability to actually, directly do so. Also, customers typically have or prefer, particular OEMs. So you think about how easy it will be with this generalization to serve, multiple OEMs at once. And, reduction of the BOM is also top of mind for everybody, right? So you want, the cheapest, safest solution. And Waabi can immediately use, different sensors if, somebody designs a new sensor that's cheaper or that sees much better, and it's super easy to integrate in the factory line. So this generalization across, these different domains is tremendously important. And the announcement that we made is that for the first time we were able to show full generalization across OEM platforms. And what this demonstration was that, the Waabi Driver was trained on Peterbilts, had never seen, for this demonstration, had never seen the new Volvo VNL Autonomous. And, without requiring, So a zero shot without requiring a single training example, without requiring engineering, was able to drive perfectly both on surface streets as well as in highways with parity with the Peterbilt truck. Imagine that, right? First time it goes into a new truck, you have parity with the rest of your fleet that is very different. So you can imagine what that means in terms of the scalability of our approach and the ability to serve, as I say, markets, the ability to really serve, what the customers really want.
Raquel, let's talk a little bit about the scenario that you guys bring your AI. So if it's not aware, and like I'm a pilot of an airplane. I fly small airplanes, and one of my favorite things to do is to go into the simulators, Microsoft Flight Simulator, and just try my hand at some of the most difficult approaches, or really the games that they gamify it. You guys are effectively doing that with autonomous vehicles. What are some of the scenarios that you really try to torment the poor autonomous AI inside of your thing? What are some of the scenarios that this thing would see that you would never put it through in real life?
Yeah, and to your point, one of the things that is very exciting of the simulator is that it has what we call adversarial mode, where it basically creates situations that are very difficult for that particular software release that you're trying to put on the road. So things that you can see, as we were developing features, for example, when, this is a couple of years ago, but we were developing construction, right? Construction can be in all different forms and shapes, and many things can happen, many different types. So it was, very easy for the simulator to create many scenarios and then basically teach the skills of driving in these complex situations to Waabi Driver. So this was instrumental in order to really get this feature to be performant in really just a couple of weeks versus what is years in the industry otherwise. So that's one example where the simulation system was tremendously impactful. Where it has been very impactful as well now is, as we prepare to the driverless launch with Volvo, is really on making the safety case and the safety assessment that our system is safer than humans, and in that has been has had a tremendous role, and has allowed us to really understand the last bit of performance improvement, and has allowed us to actually get where we are today, which is in the verge of that launch with Volvo.
So Raquel, I'd love to understand a little bit about the old classic example that everyone likes to talk about, is where the autonomous vehicle has to make a choice, and there are no good answers. So in one example, it's you have a bus full of children, and then another example, it drives off the road in the highway and effectively kills itself. That is only available, like you would never, as you mentioned, you would never put yourself, a real human driver, in that scenario, but you can and should do this in a virtual AI world. How does the AI decide between self-harm and school bus? Because that's the classic example everyone talks about, is at some point it will be required to make a decision. What are you learning about how the AI is thinking about those really hard decisions?
Yeah. So the trolley problem is something that many people are interested in, which is what you're referring to, Craig, right? And the way that we teach the AI system is really that it's going to minimize the impact in the event that an accident is unavoidable, right? And in understanding impact, understands that, for example, vulnerable road users like pedestrians, cyclists are much more vulnerable than vehicles and much more vulnerable than infrastructure. Right, so the system will prefer to harm itself versus harm others on the road, particularly those that, as I said, are vulnerable. So that's the way that we teach the system today, and it learns all these skills, right, both in simulation as well as the real world. But I always say that if regulators have an appetite to tell us how the system should behave on those situations, we can actually incorporate that knowledge into Waabi Driver in the absence of such a ethical kind of, I will say, mandate. We do it such that, we minimize kind of negative effects in that extremely, extremely rare case that there is nothing we can do, but there is going to be a collision.
Well, I think it's interesting because in a fully autonomous world, the decision should always be to kill the autonomous vehicle, if we're just the autonomous agent, sorry for my overlords and our overlords that may not like that fact, but the reality is that you want to protect the humans' lives well over the AI. It is interesting because this ethical question keeps popping up of what is the least bad scenario. But in an autonomous world where it's fully autonomous, is the AI prepared to make that decision? Is it, this idea that these things are self-aware is a conversation that pops up, but is it able to make that decision? Are you able to program it in a way and learn it where and teach it to where it does those things?
Yeah, definitely, is aware, as I said, of the consequence of its actions. And that's one of the advantages of, Waabi Driver technology is that, not only it's an end-to-end system, but it has reasoning capabilities. And it actually understands what are all the actions it can do, what are the consequences of every action, all in a fraction of a second, and then chooses the best maneuver that is the safest maneuver with the minimum consequences, across the environment around it. And it's not just about collision, it's also about making sure that, as we drive, we don't create situations for other drivers that are also tricky, right? It's not just about you colliding, but it's about you shouldn't make things that make others collide either. But yeah, all this is, the self-driving system is, is aware and is quote unquote program. It has learned. It's not really, programmed by hand, but it has learned that those are the, the things that, how it should actually behave in the real world.
So Lior left Uber Freight, is now COO with you guys. What is he doing for Waabi?
Yeah, so he is, obviously a fantastic partner for me as we continue to really, build and scale, the company, right? We raised in Q1 of this year over $1 billion, right? So we definitely are expanding very significantly, and as we are also now in the process of really truly commercializing the technology. So he's very busy on helping me out with, the company itself, right? Together with partnerships and the massive customer demand that we have. And I will share with you, Greg, that one of the things that was great to see is the fact that we do really door-to-door has created a massive pipeline of customers, both shippers and carriers, that are so excited. I cannot really wait to get their hands into Waabi Driver technology, because finally there is a solution that really truly meets them where they are at, and they don't need to, change all the way that they do their business. Instead, they have a safer, more predictable, more sustainable approach where they can actually build a better business. So that has been really fantastic to see. And the other thing I will share is that over the next really 2-3 years, we see OEM production, the bottleneck in terms of that adoption, because it's very clear that, those customers want to buy our trucks, and, it's not anymore an if. The question is when and how many can they get their hands, on. And that's been amazing to see as we continue to build really a partnership with those customers, so that we bring the future of self-driving to their business such that they take maximum advantage of what this technology can actually do for them.
All right, Raquel, a question that I know you get asked all the time, and I'm going to ask it, and I apologize because I know it's a cliche question. Timing for level 5 point-to-point transportation, is this a short-term thing? Are we going to see it by 2030? What is your timeline?
So point-to-point driverless technology is ready now. Level 5, which is everywhere, is potentially, a never reach goal, right? Or is a decade far along. But what you get with Waabi is, this year, point-to-point, in general, everywhere, right, within Texas. Next year, really the majority, if not the entire Sun Belt, and then full US, shortly after, right? So that's what is the power of this new AI technology, is that, is built for scale, and thanks to the OEM partnership and our really long-term view that we have had since day one of not compromising safety and really launching and scaling with the OEM, we have all the pieces now, right? We have the customers, we have the hardware, we have the AI that actually can drive, almost everywhere. So we are ready for that future scale, right? And it's an amazing inflection point in the industry today, and Waabi is going to lead the industry, and I have no doubt about this. And you guys are going to see over the next couple of months that that's a clear, no-brainer for everybody, and it's an amazing moment to see. I've been doing self-driving for, I think, 17 years now, and AI for 28, right? I'm aging myself here. And it's incredible to bring, these two pieces together in terms of finally having that scalable solution that meets customer needs. And that's why I started Waabi 5 years ago. And finally, the vision, the dream is here, and it's now.
Yeah, it sounds like everything is aligning well. So with that, what's next for Waabi?
Yeah, so driverless launch, right, with our Volvo partners is next on the roadmap, as well as we continue to really scale very significantly in terms of the ODD, such that the driverless launch comes very quickly with massive kind of expansion geographically across platforms, etc.
Well, Raquel, thank you so much. Best of luck on your journey. A place to spend that money. We'd love to host you here at FreightWaves and F3. So don't forget about us as you're thinking about your business. Best of luck in your process. We're going to talk about electrification and the grid coming up. It is obviously a very hot topic. AI has been a hot topic. If you're going to have autonomous trucks, you're going to have electricity to power them. And that is a big conversation about the grid itself. We're going to get into that right after these messages.
In today's freight environment, every second of uptime matters. Of course, maintenance is inevitable, but large fleets cannot succeed on reactive fixes alone. That's why Love's Truck Care delivers smarter preventative maintenance. Love's understands that operational pressures demand a nationwide service network for better visibility, actionable intelligence, and consistent execution, all of which you protect your assets, reduce your total cost of ownership, and maximize your uptime. Maintenance is, of course, inevitable, but large fleets cannot succeed on reactive fixes alone. That's why Love's Truck Care delivers smarter preventative maintenance. Learn more.
The world doesn't wait, so neither do they. Wheels on the interstate, boots on the site, hands on the shipment. We build for the world out here, and we build it with the people who live it. Ideas from the field, made real by world-class R&D. To keep the operation sharp, the front lines safe, and the world moving. From one cab to a global network, billions of miles, trillions of data points, every one making your operation better. And we never build it alone. Samsara, built with operators.
The super successful people are part of the 1%. They're part of that very, very small percentage. That's why I don't want you to do things that everybody's doing. I want you to do the small things that nobody else is doing. The people that are most successful in this business treat it like it's the only thing that's bringing income into their household. If you do that, then you'll have the same results. These people operate like they have no other chance. They have nothing else going. This is the only breadwinner that they have in play. I'm Adam Wingfield, and this is the FreightWaves Playbook. Become part of the 1%. Sign up for FreightWaves Playbook today.
Once a year, the entire freight industry stops what it's doing and comes to one place, Chattanooga, Tennessee. This is F3, the Future of Freight Festival. It isn't just a conference. It's the largest festival in freight, built to pull you all the way in. The energy, the ideas, the atmosphere, and the people who move this industry forward. Over 50 speakers, 4 events across 3 days, founders, executives, innovators, and disruptors, all under one roof, all asking the same question: what comes next? On the main stage, The sharpest minds in freight take on the biggest questions in the business, the trends, the technology, and the forces shaping what's ahead. Then the clock starts. 7 minutes, no exceptions. The cutting edge of freight tech goes head-to-head, live, battling for best in show. When the time's up, the lights go out. And in between, the conversations that don't happen anywhere else. The connections that change the trajectory of your business. The relationships you'll carry long after you leave. Because when the sessions end, the festival begins. Live entertainment, unforgettable experiences, a celebration of the world of freight, and an energy you won't find at any other event in the industry. The leaders you need, the access you won't get anywhere else. This is where knowledge is shared, where deals get done, where the future of freight gets decided. F3, Future of Freight Festival, October 27th and 28th. The Signal, Chattanooga, Tennessee. We'll see you there. Register now at live.freightwaves.com.
Welcome back to FreightWaves Today. It is all about power. And someone to tell us all about power is OptiGrid's Pat White. Pat is the Vice President of Commercial, focused on the EV grid. Pat, welcome to FreightWaves Today.
Great to be here. Thanks, Craig and Julie. Nice to meet you.
Yeah, nice to meet you as well. Look, we have been talking all day about AI data centers. We talked earlier about sort of this backlash that's happening around data centers, but it really brings a broader conversation about power itself. This is a big issue. If we're going to electrify trucks, we've got to have grid access. You guys are right at the front lines of that. Tell us a little bit about what the state of the grid is.
Yeah, I mean, it's doing it the best it can to keep up. And I think you need innovative approaches to solving some of the challenges that the grid has, like bringing power to data centers, electrification, charging hubs, and other entities that require and want to expand their electrification goals, but really can't because of the available power that they have. The utility companies, again, doing the best that they can. But again, if you look at solutions that are in the market, there's ways that we can address some of the lead times and delays that are occurring in terms of getting power to sites where it's needed most.
Pat, it's not just electric vehicles that are drawing on the grid, but it's everything that's actually competing. Even if we're going to bring manufacturing back to the United States, these factories are using robotics, and that requires a lot of energy. How are municipalities thinking about allocation towards electric vehicles? One of the things we've covered is the fact that these big semis, these electric semis, require an enormous, large transformers and grid access that puts an enormous amount of strain as competing against all these other variables. How are you guys thinking about it?
Yeah, we're really looking at it from an energy storage perspective. If you look at the solutions that we're bringing to market from a charging standpoint, leveraging batteries inside of charging and really at any site, whether it's an independent BESS or a charging solution like ours that integrates the battery right in the charger, you have the ability to store energy and charge the batteries at off-peak times while being able to utilize that energy at any given moment throughout the day and then just repeat the cycle. So I think it's really about displacement and leveraging that energy storage to provide consistency, grid resiliency, and other routes to get that energy on site and charging the things and powering the things that are needed.
So it's just battery technology is what you guys are using to really provide that sort of consistent load that's needed for electric vehicles?
It's a number of things. It starts with the power electronics and our expertise there, and really designing a solution that is going to perform under the requirements and constraints that the grid's delivering, and two, the requirements of the customer. So yes, it's battery storage at its essence, but we're a power electronics company that's designing and integrating and implementing key components that are our own, and in order to make the system work. When you think about being able to take a minimum amount of power from the grid, charge a battery, and then displace it, charge at a rate of over 200 kW. That takes some pretty sophisticated technology and power electronics that we're designing and building.
Now, does it require any modifications to sort of the amp load at a site? Like, what are companies having to do to be able to meet your requirements?
Yeah, that's a great question, and it's really the beauty of what we're doing. We allow fleet owners and organizations that are electrifying to utilize existing infrastructure that's there. So a lot of times, it's really finding that available circuit, whether it's a single phase 240 volt or 3-phase circuit, and pouring a concrete pad and putting the charger in place. Obviously, I'm simplifying that, but from a power perspective, the energy's there, the circuitry is generally there. We can plug into that without having to utilize or have upgrades to the infrastructure there.
So it just charges the batteries essentially to provide the load, and then when the truck comes in, it needs to be charged quickly. Your own internal infrastructure, the software, as well as the batteries, are able to provide the power that's not dependent upon the grid. Is that the best way to think of it?
Correct. And if you think about, if you're utilizing a 60 kW input, that's all the charge rate you're going to get. If you get more power out to charge those vehicles because of their duty cycle and when they have time available to charge in order to complete their routes or their deliveries, we can store that energy and then charge at a much higher rate. Additionally, when you look at how we're drawing from the grid and what we're able to do to mitigate demand charges and the extra utility charges that customers face when expanding fleets, there's a very powerful story there because, again, we're pulling at a minimum of a maximum of 60 kW and being able to charge at 200 kW, whereas a traditional solution would pull that 200 kW at all times.
Now, Pat, I imagine utilities like it because really that when we're sort of off peak power at night, they're able to sort of, you're able to top those batteries off and that technology off. Am I thinking of that correctly? Because I know these EV, particularly electric heavy duty trucks, have been very controversial simply because the expectation is how much pressure it puts on the grid near term. If I plug it in at the wrong time, it's going to cause a lot of disruptions. But if I plug it in off peak hours, particularly when demand consumption is really low, it's a benefit to the utility. How do the utilities think about the tech?
Absolutely. We consider utilities a huge partner in this, and even talking with customers, utilities in many cases in ports and areas where a large amount of energy and power is needed just beyond the vehicles, as you mentioned, they're being allocated megawatts. They may say that they tell the utility that they need 10 megawatts, but the utility may come back and say, well, you're only getting 2 megawatts during that period, and you need to figure out how to use it best. And that's where best solutions and integrated battery charging solutions like ours are really standing out as a solution and an arrow in the quiver, if you will, to solve the challenges that these locations are faced with. And that allocation one is a big one because of our ability to store energy in the batteries.
Yeah, that makes so much sense to have that reservoir available to then use when you need it. Okay, I read about a product you also launched, DC Flow. Can you explain what that is and what it does?
Yeah, so that's back to that power electronics expertise that we bring to the table. We're a wholly owned subsidiary of RNGV, and when we started with the company, they were looking for a solution to enable fast charging in some of their vehicles, and our team got together and developed a DC to DC converter that is able to do that within electric vehicles. It also is applicable in the solar world, where any application where a DC to DC connection would be preferred is something that we can design and utilize this product for. Specifically, it minimizes the loss of energy that occurs when you're converting and inverting various, the different phases that power goes from the grid into a DC system. The DC Flow product will minimize the loss of that. The system that we designed for RNGV is 99 percent efficient.
So Pat, I have an electric car. I drove to Nashville this weekend. I took my daughters to America Doll.
Oh,
So
fun.
like they had to go pick up the dolls. We have one in Nashville. We don't have one in Chattanooga. My wife was out of town, so we did the girls and dad
Did you
thing.
go sit and eat?
We did, but I got to tell you, I don't recommend doing the tea. Did you ever done the tea?
No.
I wouldn't recommend it. It was kind of a ripoff. It was very expensive, and the food was kind of medium. I mean, it was snacks. It was like pure sugar.
I'm sure it's
kid thing.
about the experience, really.
But they were more interested in the doll.
Yeah.
So, but one of the things, I drove from Chattanooga to Nashville. It's about 2 hours, about 120. When I bought, it was a BMW. When I bought it, they claimed I was going to get 350 miles. Not even. I'm about 240 miles is what I get on a single charge. So I had to stop, and I'm always looking for DC. All I know about it is that it's faster. Is looking for the DC. Explain the physics to me of why DC is so much faster. Is it the conversion? Like what makes DC so much faster in a charge than AC?
It's just the amount of energy that's flowing into the vehicle at the time, what it's pulling from the grid. The components within the systems allow it to do that much more efficiently and at a much higher rate. So the physics of it, I have smart technicians and engineers that I work with to really get into the details on that. But I'm with you. When I'm traveling across I-70 out here in the West, I'm looking for DC fast chargers at any chance I can get, both the amount that my vehicle will accept and also, of course, the chargers that will, deliver it strictly in that DC fast charge.
Yeah,
if you're charging it at home, the level 2 is great. But when you're going down to American Doll, you definitely want to be able to get there quickly. Otherwise, you're going to have
back quickly.
You got 2 5-year-olds sitting there bored while you're
5-year-olds. We were able to go to the grocery store. We put the DC charger in, and we spent about 10 minutes in the grocery store. And by the time we got out, it had a 15% increase in battery charge. We were down to like 3%. I wouldn't have made it home. But it was pretty impressive how fast it is versus those slow chargers.
Well, yeah. So speaking of that, I don't know the time it takes AC or DC to charge a heavy duty truck. What is could you give us a little insight into that?
Yeah, I mean, there's multiple levels of charge rate. Level 1 is what you get out of your AC outlet at home if you plugged your car into that, and that is unless you have a pretty good commute in the morning and you can manage charging it 1 to 5 kilowatts an hour. Even that's a little much for level 1. But then there's level 2, which you see a lot of at places where there's longer dwell times, anywhere from 15 and above kilowatts. And then the DC fast charging is what's becoming more and more prevalent. And that's 50 and above. In terms of the charge rate, with most consumers really looking for that 100, 150 to 200 above, given the way that their vehicles cannot accept that rate today. So Gen 1 fast chargers were around that 50 to 60 kW. That's something that our systems are looking to, potentially replace, because we can plug into that existing circuit, take that 50 to 60 kW into our battery, and then charge at 200 kW and get, again, what those consumers are looking for.
I can only imagine.
So if this is a Class A truck, how much does that cut the charging time by to be able to put more power out more quickly?
There's a lot of variables. It depends on what the vehicle can accept, but it's generally 3 to 4 times, five times faster than what you would get from a lower DC fast charge and even a level 2.
I mean, I couldn't even imagine an AC charging like for my car, which is a sedan. It takes, if I plug it into and I have a 240 outlet, so it's not like it's a 120, but it takes 8 hours to fully charge my car when we're only at 40%. It's a long, and if you go to you find these chargers on the side of roads, and if they're AC, you're sitting there and you're just waiting an hour to get 5 kilowatts, which doesn't help you very much. So these are going to be big questions to the grid, and that's the issue that you have. Is the desire to move to electric is fantastic, but you got to have infrastructure for it, Pat. And I imagine that this is just a big conversation with all the electrification and competition over electric. It's really interesting to me. We talked about this earlier, is this idea that AI data centers have become very controversial. But I didn't hear this when we were talking about electric vehicles. Like, no one was screaming about the grid drain when we were talking all electric vehicles. They're now screaming about AI data centers and what it's doing to the grid. It just feels a little hypocritical that we've gone NIMBY on AI data centers, but we're not doing it towards electric vehicles. Thoughts there? I know that you're in the game for electric vehicles, so I'm gonna let you off the hook there, but still, it does feel a little bit NIMBY.
Yeah, you're teeing this one up for me. I mean, I think from a public charging standpoint, it's so dispersed. Granted, the urban centers have a lot more electric vehicles on both coasts, but I think you're able to disperse that charging across, wherever the daily routine is for a consumer in retail outlets, and then at home, they can disperse that load across various locations. In fleet, of course, you're going to have 10, 20, 50, 100 trucks come back to the site at one time, and because of their duty cycles, all plug in at the same time. So that's where you kind of get that data center effect, where you get that large draw. That is a challenge. The benefits obviously are there. If you look into electrification, not only from the environmental aspect, but also from the maintenance and repair, the TCO really pencils out. So from that side, it's really justified. And then, as we've talked earlier, just about managing that charge time more effectively. And we seem to think that battery integrated charging is the best way to go.
Well, I mean, like California trying to outlaw the internal combustion engine and require electric vehicles, I believe by 2035. Commercial vehicles, it's going to be a huge tax on the grid. We know California's grid needs significant upgrades. These brownouts are real. It again goes back to what we were talking about, is that we need these technologies. We need companies like yourself that are helping companies address this challenge. But if we're going to have true electrification, you got to upgrade the actual grid itself. You got to make those investments, and we need more power production. So this is just something that's going to continue to be topic of conversation. And it feels like a major issue in 2028. Like, if you look at the public surveys on AI data centers themselves and electrification, it's now becoming a political lightning rod. A lot of municipalities and states are trying to outlaw AI data centers because they're worried about the grid. But again, we're talking about electric vehicles. If we're going to have electric vehicles, we also have to address the grid problems there.
Absolutely. And I think it's been political for some time now. I think, again, there's various ways to solve what we're all looking to do, with electrification, renewables. Every conversation I have about our charger and battery energy storage systems in general, renewables is the question that follows very, very quickly. Can I connect solar to the system, the BESS and the charger? And I think if you look at what's happening in the homes with deployments of battery energy storage systems and how that's helping consumers, an enterprise and fleet is right there as well, by leveraging that technology, and in areas where you can add renewables to it to help augment what's happening with the grid.
Well, let's consider nat gas also an option to all the people who are hating on nat gas. It's a very clean form of fuel. It's not a renewable, but it is far more clean, and we're drowning in it all across the country.
Well, it's being created. It's like something's got to happen with it.
I mean,
so why not
it gets
use it?
fired off of these things. That's why I'm all for it. Like, I think this is really important. By the way, I have an electric vehicle. This isn't a carbon or decarbonization. Right. It's because
Nor is it political.
It has better acceleration. And I know this because I went out and so I rented the same exact car, make and model in Salt Lake City. I went out to Utah a couple of months ago. Same exact car. One is electric, the one I own, and one was the internal combustion engine. And you could immediately tell.
You don't have that turbo lag, but it is heavier.
It's just the lag. It's the internal combustion engine has a lag. The acceleration you get in an electric vehicle is it's immediate. Yeah. It's actually pretty remarkable. Car people should like electric vehicles because it's just a better ride. It doesn't have it doesn't have the sound. It's quieter. The only problem is deer. I live in where there's a lot of deer. It's the downside. Electric vehicles sneak up on them. And I've been rammed by a big old buck. Brave little sumbitch, because he got up, dusted himself off, and ruined the woods. I don't know how he did it. I mean, that thing is heavy. So Anyways, Pat, really
Well,
enjoyed
Greg,
the
yeah, the
conversation.
driver, you can't beat the driver experience in electric vehicles. Even our trucks here will snap your head back as you hit the accelerator. And when's the last time you had to change the oil in your EV, Greg?
Well, I haven't. I will say though, Pat, I do have one gripe, and that's the tires. Is my electric vehicle because of the weight, and I live in the country. A lot of the roads aren't. We haven't done a very good job of maintaining our roads where I live. County should fix that problem. But anyways, my tires are the problem because the weight is so much more than an internal combustion engine. You eat up tires, and so that's the problem.
Yeah, you're an early adopter there. The tire manufacturers are going to get better with that. I experienced the same thing, but I had to change my driving habits a little bit, Craig. You might want to.
I'm not going to do that. I like the speed, but I will say, Pat, I know that Bridgestone and Michelin have created these like tubeless tires, which are pretty cool. That are really like there is no air, and it's like it's just new technology they're testing because they know they have to. Because these heavier vehicles, like once we add autonomous and level 4 and level 5 tech, those computer systems are heavy.
Yeah,
those sensors are heavy, and it's going to require more electrification. Pat, appreciate it.
Likewise.
Godspeed on your desire to electrify the fleet. We need it. Appreciate your time.
Very good. Thank you both very much.
We'll be right back after these messages. We're going to talk a little bit about the state of freight and earnings. Stay with us.
The world doesn't wait, so neither do they. Wheels on the interstate, boots on the site, hands on the shipment. We build for the world out here, and we build it with the people who live it. Ideas from the field, made real by world-class R&D. To keep the operation sharp, the front lines safe, and the world moving. From one cab to a global network, billions of miles, trillions of data points, every one making your operation better. And we never build it alone. Samsara, built with operators.
Once a year, the entire freight industry stops what it's doing and comes to one place, Chattanooga, Tennessee. This is F3, the Future of Freight Festival. It isn't just a conference. It's the largest festival in freight, built to pull you all the way in. The energy, the ideas, the atmosphere, and the people who move this industry forward. Over 50 speakers, 4 events across 3 days, founders, executives, innovators, and disruptors, all under one roof, all asking the same question: what comes next? On the main stage, the sharpest minds in freight take on the biggest questions in the business, the trends, the technology, and the forces shaping what's ahead. Then the clock starts. 7 minutes, no exceptions. The cutting edge of freight tech goes head to head, live, battling for best in show. When the time's up, the lights go out. And in between, the conversations that don't happen anywhere else. The connections that change the trajectory of your business. The relationships you'll carry long after you leave. Because when the sessions end, the festival begins. Live entertainment, unforgettable experiences, a celebration of the world of freight, and an energy you won't find at any other event in the industry. The leaders you need, the access you won't get anywhere else. This is where knowledge is shared, where deals get done, where the future of freight gets decided. F3, Future of Freight Festival, October 27th and 28th. The Signal, Chattanooga, Tennessee. We'll see you there. Register now at live.freightwaves.com.
What's the masterclass all about? Well, here's what I'm going to tell you. If you're a driver, you're an owner-operator, you're a fleet owner, whether you're in compliance services, dispatcher, no matter what it is, masterclass is for you. Every 2 weeks, you're going to sit down with me and we're going to go over certain business topics that are related specifically to your small trucking company operations. We're going to help you with everything from compliance to how to negotiate better on the spot board, how to find direct freight, and everything in between. This is the reason why you don't want to miss out on Masterclass. It's about an hour to an hour and a half, and then on top of that, you'll have the library to use so that way you can always research and reflect back onto it. Don't miss out this opportunity. This is built specifically for you. I'm excited and I hope to see you in class.
Welcome back to FreightWaves today. It's still earnings. We're still cycling through the earnings. Tomorrow we have RXO's Drew Wilkerson on. Really, there's only two public pure play freight brokers out there. RXO is one of those. Drew is going to tell us what they have seen, what they're experiencing right now in the market. Now, Wall Street has sold off because of the concerns around the Montgomery settlement. I think the C.H. Robinson thing. Excited to see what Drew has to say about all of that. I mean, it is a concern. Increase in insurance costs. What else are we seeing? What's on the radar as it relates to earnings?
Specifically for RXO?
Yeah.
Yeah, I mean, overall, I think it was a great quarter. Revenue was up 25%. Margin was down a bit. We've literally seen that with everyone year over year. But overall, I think it was strong. What I thought was interesting was that there was such an overhang of this liability issue, even though they didn't speak directly to it. They did talk a lot about carrier vetting and all of those sorts of things. But there certainly, you can tell, was for the stock, there was an overhang regarding that.
It strikes me that Wall Street is really, really concerned. There's so much uncertainty. We had the Montgomery judgment or Supreme Court decision. It really, C.H. Robinson has been in a number of these cases. They were in the lupus. But ultimately, if it impacts C.H. Robinson, it's going to impact the entire sector. That's really the way Wall Street's approaching it. I think it's going to be interesting to see how really over the next couple of years, all brokers sort of navigate this issue. It's interesting, someone posted on X about, I think C.H. Robinson is coming out pretty aggressive, trying to set the record straight on how they think the case is ended up, their conversation, because they know the risks are real. We had the opportunity, Matt Leffler and I, on Friday on Freight Expectations, actually had someone who was in the courtroom. You were here too. Someone that was in the courtroom that was a part of the lupus Superior case that was describing how C.H. Robinson was the employer of record. I still have a problem with that whole description. And I use the analogy of a burrito being by DoorDash. If I'm tracking the driver, because apparently this was what the case was made, is because C.H. Robinson had direct access to the driver's phone through the app, not in terms of direct access to the phone, but was using the tracking device to the driver's phone. That was the case made to the jury that they should be considered the employer of record.
And is the difference that it was the driver's phone versus, like,
I think the telematics is one degree.
Does Uber provide a phone? I don't know. Do you know what I mean?
I think the larger asset-based carriers that have their in-cab telematics. I mean, think about it from USPS. When a broker,
no, our drivers weren't being tracked by that.
You would not want your drivers to drive by that.
Right, because we were going to auto send the updates.
Yeah.
The deal was they needed access to the location.
They needed location,
which is fine. But
in smaller
we could
fleets,
provide it. In smaller fleets, they don't have
fleets, they don't have the telematics, so they're using the cell phone devices.
Or if they do have the telematics, they don't have the ability to integrate and send or push regularly too.
Point or automatic alert. It does strike me that the larger, again, we've said this frequently, that the larger asset-based carriers, the ones that have their own integrated tech stack, have much tighter criteria of hiring drivers, have the advantage in a post-Montgomery world because shippers are going to enjoy the higher degree defensibility. They know the drivers are being vetted. The percent, if you sign up to a mega fleet, the majority of, not true of everyone, but the majority of the fleets, if you apply for a job, it's like 1.5% to 2% of the drivers that apply get accepted because they don't meet the standard requirements. They don't meet the requirements of the fleet. And that means that you have a much tighter screening in terms of who is driving your freight. So if you're a shipper, there is a preference for larger motor carriers in this environment. And I think the brokers are particularly the managed trans organizations, are probably going to look for those larger fleets. And if this somehow holds, and I don't think it will, I think it's going to get appealed. Again, I'm not an attorney, won't pretend to be one, but when I talk to Matt Leffler is an attorney. His opinion is this gets thrown out on appeal is the idea, not necessarily the case itself, but the actual, is this driver an employee of C.H. Robinson? It's hard to make that case because it does, if this holds, as Matt Leffler said, it blows up the entire freight brokerage model.
Totally.
And I just can't imagine that Texas, if you've seen the cases that have been submitted to the Texas Supreme Court, they tend to side with the larger businesses. They tend to sided with Warner, they sided with Home Depot. It strikes me that they'll also likely side with C.H. Robinson. So it's going to go through the appeals process, it's going to take many years. I still have a hard time with this case.
Yeah.
Because it just feels like it's an overhang to all the other public stocks, like RXO, but it's an overhang to the entire sector.
Speaking of their earnings, the one thing that I did find incredibly interesting, and they are users of Sonar data, so they are very up to date on what's happening in the market in addition to their own data with how much they're moving, is a lot of the reason for their really good performance is they were early enough into the market shift to switch a lot of their business to spot over this quarter. And that was, I think, a huge driver of some of their success.
We're going to get into that tomorrow with Drew Wilkerson, the CEO of RXO. He's going to tell us all about it. So tune in tomorrow, start at noon, run to 2. We'll see you then. And by the way, 3 festivals coming up.